Good evening, friends. Welcome to this weekly edition of Thunder Thursdays Facebook Live. And I'm your host and host, Dr. Bhavdeep Ahuja, before you. So I hope you have been liking the previous sessions. We are into the 17th session, slowly, one by one. We are into the 17th session, and I hope the 9 sessions coming up, I'm able to impart some value addition into your financial life. So, as I promised in the group, today's session is all about a trending topic, an interesting topic, and what different can be the trending topic other than the LIC IPO. That is the biggest news right now, and the thing which investors have been waiting for, you can say, since the month of Feb. Government was supposed to launch it in March, but it has been delayed. But yes, finally, it is coming on board. So thank you so much for watching all the Facebook live sessions, and I really feel humbled and gratitude for all your love and affection. So today we are exactly on time. So let me just allow me to share my screen and start the proceedings so that we can go about our task in a pre-planned manner. Yes, I'm live. Just checking it. Yeah, perfectly all right. So welcome once again officially to the Thunder Thursdays episode number 17, week number 17. So as I promised, I'm back with one of the most interesting topics, which is trending topic, the LIC IPO, or in general, the IPO strategy. Because most of the people don't know about IPO. If mutual funds is uh, seemingly difficult, IPO is a little more difficult than that for people like us, doctors who are very less literate in this profession. So, in this profession of finance, of course, it is not our profession, but yes, financial literacy has to be a part of everyone's life. So, it has been a transition. Morning, I was speaking somewhere on practice management. Afternoon, I had a workshop on consent. And today evening, as luck would have it, on my third specialty, finance. Of course, other than dentistry, I'm talking about. So, it gives me immense pleasure to cover all these three in a single day because it is very gratifying and fulfilling for me many of the times. So, as usual, all my presentations always begin with thanking the Lord Almighty who's given me much more than what I deserve. So, when it comes to finance, of course, big thanks is due to my dad, who has been instrumental in teaching me the clinical part of finance. And trust me, he must be very proud seeing me speak on this topic. I very rarely speak on IPOs. I very rarely speak on shares or investing because this was one thing I had consciously stopped in 2018, exactly 1 year before my dad's demise in 19 June, in June 19, I mean. So I still keep on selling whatever assets I have inherited from him, but very less of buying. But yes, this is one IPO. He was very fond of IPO. Much of his wealth was accumulated over a long period of, you can say, long period of investment in the IPOs. Of course, there were some bad choices, but majority of his choices were very good choices. And trust me, whatever I am selling and inheriting into my and my mother's bank account, it is courtesy his investments only done so many years back. So this is my brief CV. You all are aware of it by now. Courtesy my MBA in finance, I'm speaking before you. So topic for this week today is IPO investment strategies, smart tips for investment in an upcoming IPO. The upcoming IPO, every day there is an IPO. Yesterday there was a campus. Today is the rainbow. So next week it'll be the BAP of all the IPOs, the LIC. So ever since the government had announced in budget 2020 that they will be disinvesting a few of the public corporations or the government held, you can say, assets. So LIC was one of them. LIC is one of the rare government owned companies which is in profit. And trust me, when we talk of government based things, we always believe that probably they are not profit making companies, so that is why the government is booting them off. So not exactly in the case of LIC. LIC is actually owning a bank also. If many of you don't know, LIC has a 51% share in IDBI Bank. Any investor, institutional investor, could not invest more than 15% or 16% at one point of time. But then the law was tweaked and amendment was made, and LIC finally invested 51% in IDBI. It could have been called a LIC bank, but it still chooses to be called an IDBI bank. Probably the LIC is the prime shareholder, of course, with the major investment of 51%. But still, after all these investments in a loss-making bank, courtesy our own Vijay Mallya ji, who took huge loans, because of which the balance sheet of the IDBI bank went in red, along with a few other banks. So LIC bailed it out, and still LIC is one of the most profitable companies. And the government decided that they will offload about 5 to 7% of the equity. And what exactly does an IPO mean? What exactly is the offloading? I'll just explain you a bit before I come to the ways to invest or ways to go about the task. So, but then there was a unprecedented happening. The DRHP, the draft red herring prospectus, was filed on 13th of Feb with the SEBI, and SEBI, the Securities Exchange Board of India, the regulating authority for markets. So it was filed on 13th of Feb, and it was supposedly about to come in the first week of March. About 3 weeks' time is there for the waiting period, and then it can come. But then came the unprecedented thing in the middle of, or maybe around 19th or 20th of Feb, the Russia-Ukraine war started. The markets started behaving badly. There was pretty much downfall right from the peak of 18,600 of Nifty. It came down to about 15,700 or so. It was a sharp fall gradually, of course. So the government had kept a target of 78,000 crore for disinvestment. Unfortunately, it was never to be seen, so it did not take a chance. So it postponed the disinvestment of the LIC to next year. The war still has not stopped, and the markets are still turbulent. One day market goes up for 700, another day it comes down 800. So the seesaw is happening. But then government tried to play smart. They decided to cut down the share from 7 to 5 to 3.5%. So about 3.5% of LIC equity owned by government is being distributed to the shareholders, is being distributed to the public. And the public has basically broadly, you can have institutional investors, you can have retail investors. In this case, there are two other quotas also, the policy holders and the employees. The policy holders quota has been kept at about 10%, and I think shareholders quota at 0.07 or 0.06% or so. The rest, about 15 to 20%, I think is the retail quota, and followed by the retail institutional investor quota. So any one of you can apply in all the three categories. If you are an employee, if you are a policy holder, you can apply in two categories: the retail investment quota, and of course the policy holder quota. But if you are not a policy holder, you are not an employee, you can still apply in the normal retail quota. So the only thing is you have to be smart. But let's come down to why I am promoting an IPO. Of course, I haven't received any money from the government of India for this purpose. But what I mean to say via this strategy is that LIC is one company which has very, very strong financials, a hugely positive balance sheet, and of course, a potential to be a long-term asset. With it being in red and almost every other Indian having the LIC policy. So there is no looking back. As I said, one of the most profitable companies of India. So what exactly an IPO strategy should be? Let's shift our focus. I've spent about the first 8 or 9 minutes on LIC only, just telling you a brief about it. As I see the notification just went in. So now shifting focus from the first 8 to 9 minutes to now the IPO investment strategy in any upcoming IPOs. What exactly do we need to look out for if we have the fishing net in hand? Which IPOs? Because IPOs recently became a bone of contention in many areas, and not many did well. The biggest IPO before LIC was Paytm, and it actually is right now floating at about 30% or so of its launch price. which is a very, very strange thing because its rating has gone down many times. Its rating was pegged at 1400, 1200, 800, 700. Ultimately, it came down to 500 also at one point of time. But then the IPOs which came up in the calendar year 2021 have been quite a lot of success. But then it has become an easy preying, you can say, market for anyone to just offload their thing. So, what are the factors we need to look at before we go in for the IPO investment strategy? So, first of all, what is an IPO? Many of you won't be aware. It is just a knowledge-based session to give you a knowledge about how the things work and how they should be looked at. So, IPO is basically initial public offering. It is when the stock of a private company is sold to the public. The public is given a chance to become a shareholder of the company, to become a partner of the company, maybe by 0.001% or whatever, you can become the partner of the company. So once the IPO is launched, the company's shares are listed on stock exchange and are available for trading. So the main purpose, as usual, is the government needs disinvestment, the government needs money. So of course, the bottom line aim is to raise money. Now, there are so many companies who wish to expand their business, repay their loans, fund general corporate purposes. They raise funds by selling a portion. But then there are some bad fish also in the market. So, because sometimes it is a way to get out of the mess that has been created, sometimes by the internal board of directors or maybe the policymakers associated with the company. So through IPO, the liquidity of the stock increases as they get listed and are available for trading. Obviously, when the shares go public, the credibility and the brand value increases and it reaches a wide strata of population. Of course, it becomes a pride issue as well if the share starts doing well. So many of us, you can say, want to earn quick money. And sometimes IPO is seen as a way to earn or create wealth by earning investment. Or some of the investors who are long-term traders or long-term investors, they see it as a way to increase generational wealth through these kind of investments. So, of course, it is not as easy as it seems because many a times it leads people to the wrong end also. So there have been times when many companies have not have performed well on the first day of their IPO, like a Nika. People booked up profit. It was around 1700 or so. It listed at 22, 23, went up to 24 as well. But now it is trading around 15 to 1600, much before the launch price. So then it hasn't created much wealth. Anyways, it was not supposed to. How did it, you can say, increase in its valuation? Or some high returns. Of course, some of the tips, let's be sharing with you what all are those tips which can give you investments. Let me give investment tips for an IPO. So number one is get obsessed with research. Don't go on hearsay. Don't, you can say, just blindly go into that. Whenever you're investing in a company or in an IPO, always have an interest with their research part, because they will have certain disclosures where there are a lot of information which will not be going to the public. There will be disclosures, but there will be some non-disclosures as well. So carry out research. Who is the company board of directors, promoters, management? What is the goodwill, reputation? What are the products range? What are the scope in the future? What are the growth prospects and other aspects of the company? And of course, the financials, the balance sheet, the profit in the past. So that is why it is surprising that a Paytm and a Zomato, which are loss-making companies, they are oversubscribed. That is the first thing which surprises me. Of course, as I mentioned about Nika also. So one has to really get obsessed with research part, compare the same with the competitors in the market, and of course the growth prospects, their sector analysis, and the DRHP, the draft red herring prospectus. Why was IPO, we can say LIC IPO again listed for being in May, when it was rejected for March? When the government crossed the financial year, it could have done anyways, because there is a rule by SEBI that once you file DRHP, you have to launch the same within 3 months of the same. If not, then you have to refile the DRHP, the draft red herring prospectus. So in LIC's case, the DRHP was filed on 13th of Feb. So 13th of May was the cutoff date. So naturally, the date of the IPO is 4th to 9th May. Sorry. So of course, the DRHP will give you detailed information about how their funds are being utilized, and it gives you a fair amount of idea, and it is available publicly, of course, on the site, whether you should invest in the IPO or not, because very few people choose to read. Even when you are investing in mutual funds, they always say, please read the offer document carefully before investing. How many of you read it? Hardly any. We just invest on hearsay. मुझे अच्छा सा fund बता दो, मैं उसमें डाल दूं पैसे. That is the way people go about it. So if the company is raising funds to repay its loans and other liabilities, then it is not a positive sign. But if it is using money for research, growth, expansion, surely it is a positive sign. And then it means that the company is widening its horizons, going to unheralded markets, and probably it is trying to diversify into its product range and services, whatever it is offering in that sense. So, of course, in LIC's case, this may not be the reason. The LIC's simple reason is the government needs money, and disinvestment is, of course, a part of that. So, there's number 3 tip is pay attention to companies, promoters, and management. So, which is one of the important points in this. So, before you invest, do a thorough background check on the promoters and their experience with the company. Because normally IPOs act as an exit window for the promoters. ये IPO आया और हम लोग यहाँ से निकले. But then they have certain lock-in period as well. So highly essential that what is the quality of the management. So that is the reason you should have strong management. Where you find a strong management, you should be applying in those IPOs only. So a responsible team of promoters and management can manage company well, of course, and thereby create the wealth for investors in the long term. So when you are you can say investing in an IPO, you'll get a price band. For example, in LIC's case, it is 904 to 949. So if you're a retail investor, you have to bid for that price. So what is the cutoff price? You have to increase. If you can bid at the cutoff price, then there are chances that you will be getting shares more. In LIC's case, you can bid in lots, and the lot is of 15. Means you can bid in the, you can say, lots of 15. And at the most, a retail investor or any category can, retail, policyholder, or employee can maximum go up to 14 lots, because the range is about approximately 2 lakh rupees. So with this price band, 14 into 15 into 900 approximately comes out to roughly, you can say, 2 lakhs or so. So if I say in the other sense, a little over 200 shares you can keep for IPO under each category, if you're a policyholder, employee, or a retail. So most of us, I believe, have a policy. So we would be a policyholder and retail. So we can apply in 2 categories. Mota mota bole to we can invest up to 4 lakhs. Of course, I'm not saying you to invest 4 lakhs in LIC. What I mean to say is that you can invest up to 4 lakhs. There has to be upper limit. But if you bid below the cutoff price, your application might not be considered. Number 5 tip is take a look at the valuation. As I said, compared with the listed peers, the similar companies who are doing it. So this is the small process. Number 1, decide where to invest, arrange the funds, open a Demat and a trading account, apply for the IPO. Of course, the SBA thing is missing. I'll deal with the SBA in the end of this presentation. Bid as per the lot size. I already told you for LIC, lot of 15, max 14 lots you can. Then share allotment takes place if you have bid up to the cutoff price. Of course, sometimes if the issue is oversubscribed, there are more chances of going it, then it is like a lottery system. Then await stock listing. In this case, 4 to 9 is the date of the IPO, and the listing date is tentatively 17th of May. So all things are planned in a very sequential manner. So number 6 tip is valuation is extremely technical and will require skill and knowledge. Many times bankers and underwriters, they judge the quality of management returns before arriving at the final offer price. That is where they made a bad judgment in case of a company like Paytm and overpriced it at 2,000. I believe that if the LIC was priced around 15 to 1600, even then it was a fair price for the company. But at 900, it is you can say a perfect price for so many investors to come in. But Paytm was surely an overpriced thing. So you should also set up your valuation benchmarks to judge the company against the peers, a similar thing. Then number 7, not 6, sorry, plan an exit strategy. The golden rule is if you have invested 2 lakhs, for example, you have 200 shares, you invested 2 lakhs, and the share opens up at, for example, 1800. For example, double the price. Again, in this case, less likely. As of now, the gray market GMP says about 5 to 10% of escalation should be there. So it should open in the range of 1050 or so. But markets are known to behave in an abnormal manner. For example, if it opens double, means opens at 1800, and you have 200 shares. So the primary thing should be to sell 100 shares. That is what is my strategy. Of course, you are free to differ with that. Primary is to sell 100 odd shares or 50% of the shares because it has opened up double. So by selling 50% of our shares, we can at least book our investment. Whatever we invested into that, we can book our investment, and whatever the rest is left, the 50% of the shares, that is our profit. That is our long-term investment. This is one exit plan. The second exit plan is that we don't sell, we keep on sticking to it. Since the financials are good, it may be a long-term asset. So both the options are there, short-term profit and long-term asset. I would still prefer you to at least take over your booked amount or invested amount and then forget the remaining for that. But yes, if you are investing a lesser amount, for example, 50,000 or 1 lakh rupees, then I would suggest you to invest and forget for at least 7 to 10 years. For at least 7 to 10 years. That is the golden thing. So if you're investing a higher amount, book 50% profit on the day of launch. But if not, lesser amount, then book and forget for smaller amount. So as an investor, it is important to decide at which level you will sell your shares and book profits. There is no end limit. At one point of time, Reliance was also at 800 on 25th of April 2020, 2 years back. So when the COVID-1 lockdown happened, Reliance also came down from 1900 to 800, almost less than half. So now, yesterday it was trading at 2880 or 2850, highest ever price. So as an investor, you should decide. अब Reliance को 5 साल बाद देखोगे तो शायद वो 5 साल बाद 4000 पे होगा, 3500 पे होगा. वो the companies like these who have strong financials, they'll keep on growing. Of course, Reliance is India's largest company, so no wonder even if it is in 5 years at double the price or even at 4,000, that wouldn't be a surprise. So if you have Reliance shares, when you want to exit, it's your strategy. Sometimes the needs decide it, sometimes the wants decide it, sometimes the insecurity decides it, and sometimes no-brainer stupidity decides it. So alternatively, you can also decide your loss levels also. It's not a given that it will open up in profit. It can open up in red also. So all IPOs don't work in favor. We have seen recently some of the IPOs have not opened up well. So determine your stop loss. That how much loss you can bear, what is your risk appetite, and book profit so that your main motive of IPO investment is attained. So what are the benefits? Of course, first mover advantage. Investors get a chance to buy the company share at a very lower price. Because if the shares of 900 open at 1800, somebody who's buying on the first day, he'll buy at 1800, surely. Because who is not trusting the company in that sense. Then high returns on investment. Of course, a 50% return in 7 days of your investment is, or rather 100% return is not a bad deal in that sense. Because aisa mauka bahut kam aata hai. Then listing gains. Of course, then the opening price is greater than the allotment price. The price band is given for this reason only. And understand the lock-in period. So this is an important part of your IPO strategy, especially for your retail investors. जो underwriters या insiders होते हैं ना, उनका एक legal contract होता है for holding the shares for a particular amount of time. If the underwriters start selling the shares, that means they have lost the confidence in the financials of the company. So the share will fall after their lock-in period is over. You have to understand what is the lock-in period. So that itself means that you should be knowledgeable enough to go in for that part. So it signifies that brokers are not confident of company's future and growth potential. So similarly, if they don't hold after the lock-in period, that means their faith and trust is lost. It is time for you also to exit. So again, benefits: get in on the action early. IPO is your window to sometimes rapid profit. As I said at the start, when I discussed for 8 to 9 minutes about the LIC part, I've never ever promoted an IPO, never ever. But this is one IPO in my past 5 to 6 years of, you can say, WhatsApp or online education. For the first time, I'm saying openly about a IPO that this is one thing that has the potential to open or grow much bigger. Of course, if you're a long-term investor, it has the potential to meet your long-term goals. My dad bought Reliance shares at 200. I sold a few of them at 2,700. So it is 13 times or 13 and a half times. As I said, yeah, I still have those, many of those. But yes, in 5 years, probably it'll be 4,000 as well. So we have to keep booking our profits. We can't keep on sticking to ye mera bacha karega. If that was a thing, then there is no point in that. So also these days, the ASBA rule comes into play. ASBA rule by SEBI. SEBI is the Securities Exchange Board of India. ASBA is application supported by blocked amount. आगे क्या होता था, आपको चेक देना पड़ता था, आपके अकाउंट से डेबिट हो जाता था पैसा 3-3 महीने, कई बार कंपनीज के पास रहता था 3 महीने, अगर अलॉट हो गया फाइन, उसमें बिडिंग सिस्टम नहीं होता था, लॉटरी सिस्टम होता था. So now the bidding system is there, you are allotted, you come to know, you get a message, you get a mail. If not, the money is returned back. The money is not debited from your account. So most of the retail investors are investing through ASBA route only. So what is ASBA? I'll just detail you a bit about it. So full form of ASBA is applications supported by blocked amount. It itself is self-explanatory, which means that you are applying for an IPO, but you are not paying the company money. For example, your saving account has 3 lakh rupees, the account which is linked to your DMAT account. Yes, the first thing is you need a DMAT or a trading account. Of course, DMAT is a mandatory thing. So if you want to sell, then you need a trading account. So applications supported by block. For example, your saving account has 3 lakh rupees and you invested for the whole quota, the 2 lakh quota, which is being allowed to as a retail investor. So you applied for the full quota of 2 lakh. You bid for the whole quota. So your 1 lakh would be free to withdraw, or whatever the minimum balance 10,000 minus कर लो. 1 लाख आप 90,000 निकलवा सकते हैं उस अकाउंट में से. 2 लाख आपका ब्लॉक रहेगा जब तक आपका एसबा के अंडर आपका अमाउंट प्लेज कर दिया जाएगा. सो अगर आपको शेयर्स अलॉट हो गए तो पैसा डेबिट होगा, शेयर्स डीमैट अकाउंट में आ जाएंगे. देयर इज नो फिजिकल चेंजिंग ऑफ शेयर्स दीज डेज. शेयर्स आर इन डीमटेरियलाइज्ड फॉर्म, नॉन पेपर फॉर्म, व्हिच वी ऑल कॉल इट. सो एसबा के अंडर यही फायदा है. Who can apply? The basically self-certified syndicate banks होते हैं. Almost all nationalized banks are there. They are known as SCSBs. So any individual can apply through ASBA through the big book building route. I'll show you the route as well. So you have to be a residential retail investor, means an Indian. Apply 1 lakh. So bidding at cutoff price should be there. Otherwise, it should not be. It will not be considered. Cutoff price means 904 to 949. 904 is the cutoff price. So is applying through block of funds with the SCSB, self-certified syndicate bank, not agreed not to revise her bid and is not bidding under any of the reserve categories. Some banks have their own terms and conditions. So this is the route of ASBA. You submit a manual form to the SCSB, self-certified syndicate bank, or you can submit via e-form from NSE India. You apply, approach the bank, self-certified syndicate bank, SCBs, and of course they verify the detail and block the funds in investor's account. That amount is blocked. The banks will upload the bid on the NSE ASBA system, and of course the T+9 day the shares are allotted. If they are allotted, they are credited to investors DP account. DP is depository participant. So that you get a number under the share under the DMAT account. So that is known as the investors DP account. So otherwise, if you are not allotted, it shall unblock and transfer the money to the issuer's account designated for the purpose under each category. So withdrawn or rejected are returned back. So this is the way it works. So it usually happens on T+9. As I told you, the date is 4th to 9th. The tentative launch date is, or listing date is 17th of May, approximately 9+8 or 9+9 days. So this happens on T+9. So this is the way ASBA works. Why this is popular? Because most of the banks have ASBA on their net banking these days. You can invest through those banks via this only. So of course, this was a PNB ad. SEBI has made it compulsory for retail investors to subscribe IPO via ASBA. So integrated with CBS, core banking solution, UPI and IBS. Earns interest during the lien period. Lien period is when the money is being blocked. It is still in your saving account. You can't withdraw the money, but it is earning the interest. It was earlier. So there is no delay in refund because it is not never debited from your account if you are not allotted. So you can withdraw your ASBA bid before the allotment date, and of course user friendly. So the carry home gyan for today is IPOs are a great method for companies to raise equity capital to make public as the shareholder in the company. At the same time, again, investors get a good chance to generate and create wealth for themselves. But you have to understand that there are so many disclosures which are not being made public. So try doing research and getting all the information before investing in any IPO. This is the prime reason, because I believe in slow and disciplined investment, of course, at a higher rate of interest, not in the FDs or not in the nationalized saving account. I still want to earn at higher, but IPOs are still a risky bet. But never mind, you can do it. So let's revise the moral of the whole story. The first IPO when the company comes up is known as initial public offering or IPO. Step 1, financial performance of the company needs to be checked. Financial prospects need to be ascertained. Reasons for the company to raise money should be known to investors. Shares of the company should be fairly valued. Any legal issue should be checked. Investment grade of the IPO should be considered, which is more or less good in case of, or rather very good in case of LIC. So I hope you have something to carry home from this. So LIC would be open on 4th of May. All you need is a demat account and a net banking for the ASBA thing. So thank you so much for your patient hearing. I hope today's session did provide you some value. So I'm running 2 WhatsApp groups. You all know about it. Physics group is on. This is purely advertisement based educational group, where the intensity would be increasing after the month of June. In July onwards, there'll be some different things being tried out. Once the live responsibility finishes on 30th June, I'll be doing a few different things in text mode in the group itself to make the group more interactive. So I have a YouTube channel also. Many of you know it. If you don't know it, go to YouTube, search Dr. Bhavdeep Ahuja. It is by my name only, Dr. Bhavdeep. Do subscribe and hit the bell icon. I keep on posting a video every alternate day. This video, what you're watching live, will go to YouTube on in the morning at 8:30 a.m. So as on not today, sorry, 25th of April, 455 plus videos are already there on my channel. So my social media presence, all by my name: Clubhouse, Instagram, Facebook. You can follow me, send me a request. I'll be there. So do send me your feedback on my cell, on my page, on my YouTube, on my WhatsApp group, wherever you're watching it. Bookers and Big Bad both will be welcome in equal mind. So thank you so much once again. And I stop my share for questions on the page or acknowledging the visitors on my Facebook page where the same is happening. Okay. Hi, Dr. Rajat. Hi, Dr. Manoj. Hi, Dr. Renuka. Hi, Dr. Ramchandra. Everybody joined late because the notification was late today. I know that. So, hello, Dr. Rajendra Desai. Hello, Dr. Anupama ma'am. Hello, Dr. Milind. Hello, Rohit ji. Kya hal hai? Hello, Dr. Aarti. Okay. Hello, Dr. Parul. Dr. Parul asks, sir, what is the tax percentage on immediate sale profit? Long term will be 10% on profit, right, sir? Yes, long term will be 10%, but short term would be, if I'm not wrong, 20%. Short term gains should be there. So 15 or 20, I'm not really sure, but I think around 20 only. So, but yes, the government today only held a meeting where they're going to think about revising the LTCG as well. Today only the meeting happened. I just happened to read an article heading only in the evening. I didn't read the full article, but sure, if there are any changes, it'll be notified very, very soon. Of course, not before the budget, they'll be notifying it because 2023 budget is the only chance for them to give us some bad news, because the 2024 budget will be a populist budget. That is what I presume. So, hi, Dr. Ritvik Tyagi. Hi, Dr. Raghu Ganesh. Thank you so much. Hi, Dr. Ramchandra sir. Thank you. Notification was late, so if any of you missed it, because I started right at 8:14 today and it's 8:50 today. So this session is about 36 minutes. If you joined, because notification was almost 10 minutes late today, I don't know how and why. So if the notification was late, so need to watch the whole 36 minutes, because in the beginning also I laid out a few interesting, important things about LSA IPO, different from what I've shared in the WhatsApp group yesterday. Of course, things will keep on, more and more details will be coming, and of course the GMP will be rising. Some of you have known the terms. What is GMP? GMP is gray market pricing. OFS, offer for sale, another offer for sale. So those were a few terminologies that were used in the WhatsApp group. You might not be aware of them. So this is the basic process through which the things work. I've tried to shortlist and tell you all of these. So I hope this session was of some value to you. Thank you so much. Bye-bye. Take care. Have a great weekend ahead. And I'll be back on Monday with Miraculous Mondays, episode number 18. Bye-bye.